Record home prices hit $435,300. Why first-time buyers can't enter the market in 2025? The housing market is in crisis, and it's hitting first-time buyers the hardest. Imagine saving for years, only to find that home prices have skyrocketed beyond your reach. That's the harsh reality many are facing, as home prices reached an all-time high in June, according to the National Association of Realtors. The median home price soared to $435,300, a 2% increase from the previous year, marking the 24th consecutive month of year-over-year price hikes. But here's where it gets even more concerning. Sales of previously owned homes dropped by 2.7% to a seasonally adjusted annual rate of 3.93 million, the lowest since 1995. Realtor.com senior economist Joel Berner warns, we're on pace for the slowest year in 30 years. And this is the part most people miss. While prices are climbing, the market isn't booming for everyone. Sales plummeted in the Northeast, Midwest, and South, though they saw a modest rise in the West. On an annual basis, the Northeast and West experienced declines, while the Midwest and South saw slight increases. Meanwhile, builders are constructing the smallest homes in nearly 14 years, according to U.S. Census data, further squeezing an already tight market. NAR chief economist Lawrence Yun points the finger at multiple years of undersupply of homes for first-time buyers. He explains, home construction continues to lag population growth, keeping first-time buyers out of the market. We need more supply to boost their share in the coming years, even if some markets seem temporarily oversupplied now. But here's where it gets controversial. High mortgage rates are exacerbating the issue. Yun argues that if rates drop to 6%, an additional 160,000 renters could become first-time homeowners, sparking activity from existing homeowners. Yet as of now, the average 30-year fixed mortgage rate sits at 6.74%, according to Freddie Mac. Another surprising twist? While sale prices rose in June, listing prices remain flat, indicating that the lower end of the market is stagnant. Joel Berner notes the top end of the market is outperforming the lower end. Wealthier buyers are snapping up higher price homes, while first-time buyers are being priced out of entry-level options. This disparity raises a thought-provoking question. Is the housing market favoring the wealthy at the expense of aspiring homeowners? Let us know what you think in the comments. Realtor.com predicts the benchmark 30-year fixed mortgage rate could fall to 6.4% by year-end, but Berner remains cautious. It's unclear if that will be enough to truly shift the market, he says. Lower interest rates are key to revitalizing the bottom tier, but will they drop enough and soon enough to make a difference? The clock is ticking, and the stakes have never been higher for those dreaming of homeownership. U.S. new home sales fall short of expectations in June. Inventory rises to 13-year high. The American dream of owning a new home seems to be hitting some roadblocks, as June sales figures fell short of expectations. But here's where it gets controversial. While demand for newly built homes is lackluster, the supply of available houses has surged to levels not seen since late 2007. This growing inventory could keep the housing market subdued for months to come. But what does this mean for buyers, builders, and the broader economy? Let's dig into the details and explore why this trend matters more than you might think. According to data released by the U.S. Commerce Department Census Bureau, sales of newly constructed single-family homes edged up by just 0.6% in June. That brought the seasonally adjusted annual rate to 627,000 units, a modest increase from May's revised figure of 623,000 units. However, this growth was far below economists' projections. Analysts surveyed by Reuters had anticipated a stronger rebound, predicting sales would climb to around 650,000 units. So why did reality fall so short of these forecasts? One major factor is the stubbornly high cost of borrowing money. Mortgage rates have remained elevated, with a popular 30-year fixed rate hovering near 7%. This comes after the Federal Reserve decided to pause its interest rate cuts earlier this year, citing concerns over inflationary pressures linked to protectionist trade policies. With financing becoming more expensive, potential homebuyers are finding it harder to commit to purchasing a new house. And this is the part most people miss. Even small changes in mortgage rates can significantly impact affordability, especially for first-time buyers or those with tighter budgets. Looking at regional trends paints an even clearer picture of the uneven housing landscape. In the densely populated South, sales rose by 5.1%, reflecting ongoing population growth and relatively lower costs compared to other parts of the country. Meanwhile, the Midwest saw a healthy gain of 6.3%. However, things weren't as rosy elsewhere. Sales plummeted by a staggering 27.6% in the Northeast and dipped by 8.4% in the West, regions known for their higher price tags and competitive markets. These sharp declines underscore how sensitive the housing market is to economic conditions and buyer confidence. But perhaps the most striking development is the rising inventory of unsold homes. At the end of June, there were 511,000 new houses sitting on the market, the highest level since October 2007. To put that into perspective, if sales continued at June's pace, it would take nearly 9.8 months to sell all the available stock. Compare that to May, when the timeline was slightly shorter at 9.7 months. This mounting surplus is putting downward pressure on prices, making life tougher for builders who rely on steady profits to stay afloat. Indeed, the median price of a new home dropped by 2.9% year over year, settling at $401,800 in June. For context, this decline reflects a broader trend among developers who are increasingly offering discounts to lure hesitant buyers. A recent survey by the National Association of Home Builders revealed that the percentage of builders cutting prices reached its highest point since 2022. It's clear that competition is heating up, leaving many in the industry scrambling to adapt. And so what lies ahead for the housing market? Government data already hints at challenges brewing beneath the surface. Single-family home construction hit an 11-month low in June, while permits for future projects sank to their lowest level in over 2 years. Economists believe that residential investment, encompassing everything from building new homes to broker commissions, likely gating weighed down GDP growth during the second quarter. If this pattern persists, it could signal trouble for the overall economy. And now we circle back to the big question. Is this slowdown the temporary blip caused by external factors like interest rates and trade policy? Or does it signal deeper issues within the housing sector? Could it be that Americans are rethinking homeownership altogether? We'd love to hear your thoughts. Do you think the current dip in new home sales will reverse course anytime soon? Or are we headed for a prolonged period of stagnation? Share your opinion in the comments below and join the conversation.